from ATFX joining me now. Volatile is an understatement this series, Nick, but more than double jobs created, the Aussie on a tear now.
Absolutely, yeah. It was, I'm a little bit surprised. I think most of the market thought they might skew a bit to the top side, but 65 is out the park, isn't it? I think we were thinking around 30,000. So that's huge. And the unemployment rate coming down to 4.1 is that's probably going to be the headline we see later on today. And as you can see there, that chart's a little bit out of date now, isn't it? But we're challenging those highs, and I would imagine we're going to see the Aussie break higher through those highs could be in the next few minutes, the way it's going, to be honest.
Yeah, well, I mean, going through 68 pretty much, but when 70 on the radar, people are saying end of year. I reckon it could be sooner than that.
I think it could be sooner than that. Yeah, I mean, end of the year is a little bit of a weak estimate, I would say. Maybe this quarter we could see 70 cents. It's going to depend on the dollar side, as we know.
Yeah.
We've seen a bit of weakening in the dollar. That strengthened last night. It's kind of happy Taco Thursday for us, isn't it? So that dollar side, but I think the Aussie's going to remain bid. I think it will remain bid against the dollar, and certainly probably the crosses is the way to go now. I don't know what levels we're trading at, sterling yen and sterling Aussie and euro Aussie, but that's certainly one, and I think Aussie yen's the other one that people will be looking to jump on.
Absolutely, that's where I was going to go next, particularly the extraordinary move we've seen in JGBs over the course of the week. Explain to us what you have made of that, and I guess why we are looking closely at not just dollar yen but Aussie yen.
I think Aussie yen in particular we look for on risk trades. So when risk is on and things are looking good, and they're looking good for the Australian economy, we've had a knockback in global sentiment in the start of the week with the Trump tariffs. We've now seen what is now kind of a traditional pullback, and things are looking fairly perky. Stocks are still racing towards highs again. Aussie yen normally goes well in these conditions. What we've got now is this election coming in Japan as well. Speaking to some of the Japanese banks today, they feel that we will have that we will see a win for the incumbent party. That will put pressure on JGBs, but it should also see the yen depreciate, and so that will help both sides of that equation. Aussie yen could really take on a massive tear. The one caveat we have to put when we know yen's weakening and weakening fast is that BOJ and the MOF may come in and we might see some intervention.
Yeah, always on the lookout for there. Okay, let's get into what we're seeing with the euro. We're talking there about taco trade, Trump always chickening out. The threat there for Greenland seems to have been softened somewhat. So what is the euro doing?
Absolutely. So I think the FX market called his bluff literally within a couple of hours of the start of the week. I thought, and I think a lot of people thought, that euro would take a decent hit, and so would sterling, and then maybe come back. But it opened slightly lower. It opened about 30 or 40 points lower, and then it's pretty much gone topside after that. So you can see there on the chart, it's capped out again just underneath that trendline resistance at 118. We're back in the middle of the range. In all honesty, now I think we're dependent for the next few days on what happens with this tariff saga. But after that, I think we're going to see, we're probably going to see euro still remain bid on dips, but it's been range bound for a while, and I think it's going to remain around these levels for the first quarter.
And gold, I mean, 4,800, 4,900, looking very close. I mean, these $5,000 bids are looking very conservative now.
They are, and it was, people were calling 5,000 by the end of the year, and we're only $120 odd away from it last night. So it does feel that gold is on a tear, right?
That's an extraordinary chart.
That chart, and when you steepen it and take it in, it's even more extraordinary. But we've definitely seen a move into gold over the last year. We know it's gone like sort of 75% since that breakup, all the way back down in September. And since the start of the year, I think it's done another 15%, which is, it's crazy, but they're lining up down the road in Martin Place to buy as much as they can.
And silver now too. I think I'm going to go hock all my jewellery. All right, Nick, always great to chat. Thanks so much. Nick Twidale from ATFX.